Hey, what's happening, internet? My name is Andrew, otherwise known as Drewicious. I am shooting this video for the second time because I had the wrong mic plugged in and all you hear is the room. So I wanted you to get all of the beautiful baritone that I have to offer you. You're welcome. Today we're going to talk about charting. Got some questions in the Discord tonight. I thought, what a great topic for a video. I've touched on this before a little bit, but today I want to talk a little bit more about the process and less about like, hey, what am I charting tonight? More about what is my process for charting, in hopes that that will be useful for, I don't know, you or your dad. I'm not sure. Before we get started, I know you haven't watched the video yet. I don't know if you know I'm going to provide any value. You don't know if I'm going to be an irritating son of a bitch or funny or informative or none of the above. But if I turn out to be something, would you mind clicking the like button? Also be amazing if you want to subscribe to the channel, tell your friends about it, go watch some other videos. It's free content, helps me out if you guys let the world know that it's not a waste of my time. So moving on, we're going to switch over to that view. You're welcome. Oh, and I need to bring that back up. All right. So charting 101. What is the process? How do I think about it? What do I do? It is different for everybody. Charting is definitely an art, not a science, but I will walk you through some of my thought processes, what I'm looking for, and you can take that and turn it into your version of charting. So we're going to go ahead and jump into the content. So I think of charting, I go through 4 steps, and I do this almost every night. Whenever I'm actively trading, I do it almost every night. I do it on the weekly basis. My time frames change a little bit depending if we're at end of month, end of week, or middle of the week. But if I'm actively trading, I am definitely doing my charting every night, looking for opportunities, and then frequently posting those on Twitter or StockTwits or in any of the several Discords that I participate in. So what are the 4 steps? We filter, right? We got to narrow down the thousands of ticker symbols that are out there to the ones that we're interested in based on characteristics of those tickers and their activity. Inside of them, we need to assess them for opportunities, right? What are we actually looking for? What type of setup? What sort of candlesticks? What sort of patterns are we looking for in order to determine that an opportunity may be present? If appropriate, the next step would be to draw out the patterns. If you can see them without drawing them out, good on you. I'm a very visual person. I still want to see the patterns there for the most part, unless I'm in either a hurry or I just kind of notice something and I want to jump on it. But we're going to go through the process today of charting things out, or of drawing it, and then following the rules for the patterns that you find, right? So you should have a sense of, what am I expecting to happen here? Where do I get in? Where do I get out? If I'm right or if I'm wrong, right? That's your trade plan. So this is something I pulled off the internet. You guys can do it too. And thank you to whoever it was that it's Trading Spine, I think, Trading Spine. Put this together. Thank you. I didn't ask permission, and if you tell me to take down my video, I guess I will, but I'm just letting everybody know about www.tradingspine.com. They're fantastic. And they put this very nice graphic together about technical patterns. Now they're talking about it for Forex, but the truth is that these patterns can work on any sort of ticker or index. But these are common patterns, and the reason that these are interesting is they're interesting is because they tend to reoccur in nature. They are the reaction of price behavior and human nature of looking at something and following a fairly consistent pattern. So you could draw scribbles all over stuff, and if they're not repeatable and they don't happen, with some sort of regularity, then they're not really a reliable technical analysis pattern. But you can see in here that we have triangles and wedges and banners and ascending wedges and cups and handles, and I'm going to move my mouse over here to see if I can. Oh, you can't even see it there, can you? But heads and shoulders, right? All these things are out here. Here's the mistake that I made when I started, and I'm going to try and, if you're just getting around to figuring out like technical analysis and charting for yourself, here's the thing I want to unload from you. You do not need to know all of these. You only need to pick one to start. Don't try to memorize them all and go find them all the time. Just pick one that you like. I would suggest double tops, double bottoms. You can, the variation there, triple top, triple bottom, right? But a consistent hitting of a given level. Heads and shoulders and cup and handle. Those are bread and butter plays. They're fairly reliable, and how to play them is fairly well known. So start there, build up your collection of other patterns as you go, but don't get mired down in this. Just pick one pattern that you like and start looking for it and play that. Okay. Now these tend to be price action patterns, right? So this requires a series of candlesticks to play out, or lines if you're using those. But this requires a series of sessions to play out in order to identify that one of these patterns might be present. The other way to do this is with just candlesticks. There are candlestick patterns that you can also play. Same thing as the other ones. You don't need to memorize all these, just maybe a couple, right? One or two. If you've watched any of my other videos, well, not any of them, but if you've watched some of my other videos, you know that I'm a huge fan of inside bars. We're going to be talking about them tonight because I like them so much. That is a technical pattern. In fact, I think that's engulfing. There's an inside bar right there. So it's a candlestick pattern instead of a price action pattern, and you can look for either, or just one or both, up to you, right? But these are the things that we're looking for as we get into our, we don't need to go that far, as we get into our trade. So we're going to turn this off and we're going to jump over to my trusty Thinkorswim, and we're going to go into my inside bar scanner. You can see I've already got one up here. I was doing some screening earlier, so we're going to take advantage of some of that. But let's go take a quick look at what is inside of the scan. Now, as I said, the first step is actually filtering out all of the tickers you don't want, right? So the typical way to do that is to use a screener. I used a built-in screener in Thinkorswim. You can use anything you like. The broker that you're in probably has some sort of a screener. Webull has one. TradingView, I'm pretty sure, has a screener in it. I know a lot of people like FinViz. That's one I got from a great trader named Sparrow. Barchart.com is another one, right? There's hundreds, if not thousands, of different screening websites out there. And the goal is to just install some filters that get rid of the noise, right? You do not want to look through thousands of tickers every night. You want to look at the ones that are interesting. So what kinds of things am I filtering for when I do my inside ticker scan here? Well, I've got one ticker here. Now, granted, I do want to give a disclaimer here. I am looking for options plays. So what you're looking for may be different, right? If you're looking for penny stocks or you're looking for mid caps and you want to play equities, right? You're going to change these around in order to get the thing that you're interested in. So, but in my case, what I'm looking for is a market cap of 1 billion. I want to see the stock has at least 3 million in shares traded every day, right? I want a highly liquid stock or ticker to trade. I don't want stocks that are less than $15. They are too whippy for my tastes. And I'd like to see at least 2,000 contracts of options traded in a day, right? Those are my criteria for what represents an interesting ticker, generally speaking. And sometimes I move these around a little bit depending on what I'm getting back. If I want to raise the level, maybe I only want to see 4,000 option contracts traded in a day because I'm not interested in the lower volume tickers. And then I've got, my screener here for the inside bar, and then ATRP is a thing I've explained in other videos, but it's a volatility filter that gets rid of things that are just too slow for my taste, right? I want things that move a little bit. So those are the things that I'm looking for, right? So all of these resulted in these findings, which are over here, and we're going to go take a look at some of those examples. So I went through this one in the previous chart, but so this is SE. They've been on a nice move up here for a while. They had a good ER and a big move out there. So here's what I see. You can see that I've already done a little bit of charting on this thing, but you can see that I've got a couple of alerts already, right? That is because of the inside bar. So we're going to start in kind of close. Now this is actually not just one inside bar, but it is 1, 2. It's a double inside bar. So I'm looking for a break in this case of the child candle. Right, so we have a single child candle, another child candle that is the parent to this one, and then the parent to that child candle as well. So we have a couple different levels of breakouts here that we're interested in. I'm going to pay attention. I'm looking to see when we break the first child, right, the high or the low of that first child, and then I'm going to be looking for continuation to see if we get beyond the next round of it. The next set of wicks for the previous days. So that's the first thing that we got, right? Because we're doing the inside bar scanner, we've got this inside. So first I'm looking at a candlestick pattern, right? And I've got some alerts here marked based on what I'm looking for out of that candlestick. Now, backing out a little bit, there are some other things going on this chart. You notice I've got a dotted line here, right? I put a horizontal line going across, and if I bet you can guess why I put that line there, right? It's because we have noticed a number of significant rejections when the price got to that level, right? 1, 2, 3, 4, 5, 6, 7 rejections at this price level, right? So 7 times this ticker has attempted to get beyond $91 and failed. So if we go up here, I'm going to be looking at that level, right? That represents some resistance or some supply, however you want to think about that. But one way or the other, this ticker struggles to get over it. Now, if it does break through that, we have a nice play here. There's a hidden gap here. And so I expect that we could rocket up to 100 pretty quickly if we make it past this, right? Because there's going to be a lot of stop orders put in just above this level. So believe me, if we get up past $91, I'm going to be watching. But I'm not expecting that. What I'm expecting is that if we do break up here, that we're going to run into resistance here and possibly reject. In addition to that, I'm also looking at this formation here, right? So since the ER, we had a big move up, and then we've been consolidating in a fairly consistent pattern here. And you'll notice if I'm just kind of tracing the outsides, let's see if I can get a better look at this thing here. If I just trace the outsides where the wicks are going on these things, you'll notice that there is a bit of a wedge forming here. It looks to me like an ascending wedge. And so the traditional play, if we were to go back to the technical analysis chart that we looked at earlier, right, or that you can go Google and grab yourself a cheat sheet, if we go look at that, an ascending wedge is traditionally expected to be a bearish breakdown. So that is, and going back to one of my previous videos last couple of weeks about confluence models, right? When we start building up our confluence model for what are we looking for here, I see an ascending wedge that's bearish. I see double inside bars. That is neither bullish nor bearish, but it does indicate that a move could be coming. So this amplifies whatever sort of a move we do have coming up. RSI is a little on the hot side, right? We poked up really high on a massive move up on the ER, and then we've been kind of finding our balance here. So RSI is a little on the warm side, but there's definitely still room to warm up, so it's not vetoing the trade for me. MACD is on the upside of it. Now, these are the indicators that I'm looking at, right? And these are mostly lagging indicators, so take them with a grain of salt, but they can help just bear context. So MACD is above the 0 line, and but it is kind of closing down a little bit. You can see the histogram is getting smaller, indicating that the move is starting to lose a little bit of its momentum, and the TTM squeeze is starting to round. So if it starts to come down a little bit, right, it can absolutely still take off, but it would not be necessarily uncommon to see this start to come back down towards its 0 line a little bit as well. So I am seeing more reasons for this price to go down than to go up, in addition to which I see more risk to the upside than I do to the downside. I see lots of room to move down here. I see very little room to move up here. So I am primarily interested in this play to the upside. Now, that being said, we have a $5 move available. If we break up here at $85, right, that would be the break above the secondary inside day here and its parent. So right at $85, if we break above that, we got a nice $5-6 move here, which on this ticker will absolutely bear fruit. So if we get a move up, I'll take it. If we get the move down, I'm going to be interested in that too. One other thing I do want to point, two other things I do want to point out over here in the screener. You can see that I've got 2 other columns here listed, beta and ATR. Those also factor into my plays, and I'll describe how here as I'm kind of putting together my thesis for this given trade, right? So we already know that I'm interested if we break this range. We know that I'm watching this ascending wedge here. We know that we've got a price level up here that I'm interested in. We've got a gap down here that I'm watching, and in our lower levels of support here, right? If we look at the horizontal levels of where does this price seem to care about things, I see, there's a level of support right about here, right? So there's a 1, 2, 3, 4, 5, 6 touch line right there. I'm kind of scanning up a little bit, looking for more lines. Here's another one right about there. You can see that this is kind of towards the top, so we'll add another horizontal line right about here. You can see that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? So a 10 touch line, right? I'm counting those touches because the more times the price reacts at a given level, the more powerful that level is, right? Essentially, that means that more eyes can see it and more people are anticipating a change. So more people are going to take their profits at that level. More people are going to debate whether it is going up or down at that level, right? If we had a volume profile up here, we'd likely see that these are areas where more discussion occurs, where there's more volume because the buyers and sellers are debating the value of the ticker at this level. So, but what am I doing here? Ultimately, I'm looking for, well, where could this thing stop? What would a price target be for this thing if it did take a breakdown? Well, price targets are, we got all sorts of buyers hidden in these wicks down here, right? But if we see a breakdown here, we've got a gap to fill here, right? So we could see, if we clear all of these buyers here, we got a gap to fill down here to about, 67 to 65. The next major pivot point is right down here around 60. And then we start getting down into like the 50s and the 45s, right? So I'm just kind of looking at these. Where did the price turn around? Where did buyers step in again, right? They stepped in here and here and here. So those are the areas where I'd be looking if we get a momentum move down, right? If this is a true reversal, right? And that means that we're gonna have to like undo all the good news from the ER and stuff. It's not super likely that we're gonna come all the way back down here, right? But we're marking off where could we see it going. Right now, what I'd be expecting for, from a price target is inside bar play. I'd be looking for, my first price target will be the lower wick of the parent of that play. And then, I'm sorry, the parent of that bar, then the lower wick of the parent of that bar, and then I will be cautiously looking all the way down here because there are wicks indicating buyers all the way down this trend until we get down here. So I will be very cautious and I will take profits very quickly out of this. Now, back to the numbers over here. Beta and ATR are also useful bits of information. Beta is an indication of volatility compared to the index that a ticker relates to. So I believe that SE is a ticker that is I think they're tech. So I'm expecting that they may be mapped to NASDAQ. And so a ticker that moves exactly as volatilely, is volatility a word? I don't know. A ticker that is exactly as volatile as NASDAQ is going to have a beta of 1, right? A ticker that is twice as volatile as NASDAQ is going to have a beta of 2. In this case, we've got a beta of 0.26, which means we're about a quarter as volatile as NASDAQ. So for a big move in NASDAQ, we're going to have a more muted move in SE. Now, that normally would not be interesting to me. I normally don't play super low beta tickers unless I'm going to play them for a swing, because low beta tickers tend to have a lower IV, which means that their premiums would be a little bit lower. And when they have a big move, it can pay massively because it's an outsized move. So once we start exceeding, an average range in here and the volatility actually kicks up because of that move, we see our premiums on options accelerate. Now, that is primarily an option strategy that doesn't pay out for options, but this next one can help out for options as well. ATR is the average true range, and it is essentially how far we expect a ticker to move on a given period, right? So right now we're looking at a daily. So we would expect a daily candle on average to be about $4 up or down. Right, and that's not $4 all the way up or $4 all the way down. It's a range of $4. So that gives us some idea of how far we might expect our ticker to move. So half of the ATR, if we're just sort of flipping a coin here, half of that ATR could be going up, half of it could be going down. You might get all of it going up or down, but I do use that value to determine how much of that range I have to use in order to get the break that I'm interested in. There are times where I look at the ATR and I think I see a good setup, but by the time I'm done subtracting the move I need to get the play, I've burned up the majority of the ATR, and that just it doesn't mean that it can't happen. It just means that my odds are not as good. So I have absolutely taken plays out of my list before because the move is just, too big to get to the explosion that I want, right? Like, I'm looking for big plays and I don't want to expend my range getting down to the setup, right? I might come back and check that ticker tomorrow. So in this case, we got a $4 ATR. So that means that I've got at least $2 to get to my next move, right? So that means the close here at 83.24. I need to get to 81.75. So I'm going to spend about $2 to get to the bottom here. And if I use my entire ATR, I can get another $2, which could get me pretty close to the bottom of that parent candle. And if it's a swing, and that's what I would recommend with a beta this low, I'd be looking for a break here and then a break here, right? And then we can start working our way back on down here. So I would be looking for this as like a couple of weeks to a month out swing. I'd be looking once I get that break, following that, and probably taking my profits pretty quickly out of this. I don't have super high confidence that we're going to reject all the way back down to 55, but if I take out a lot, I might leave some runners to find out how far they go down. So, all right. That is the way that I would look at playing SE. Let's look at a couple others of these just for examples. Talk about what I'm seeing. Again, the goal here is for you to take, sort of these concepts and apply them in a way that makes sense to you, right? It does not matter what I see. It matters what you see. But I understand that it's helpful to see, things through other people's eyes as you're learning new skills. So I'm going to pull this. Oops, that's not what I meant to do. Back out. Let me get this box out of the way. Oh, I can't get this box. There we go. Get this box out of the way. All right, so we got Intel. I played this one a couple of weeks ago when what was a fascinating play because Nasdaq was bleeding in the streets, and Intel was just on a rip. So this whole move up here occurred while the rest of tech was dying. You can see that I've already marked this chart up a little bit because I have been playing it. So you can see that I've identified some trend lines here and a trend line here. So again, it's the same mindset, right? I'm looking for places where the price reacts, and I'm looking for lines, right? Are there, I see a trend line here, a slightly descending trend line here. I saw an ascending trend line here, and you can see that, we've got a 1, 2, 3, 4 touch line on top. We've got a 1, 2, 3, 4, 5, 6 touch line on this trend line here. And and who knows, there's probably another one coming down here. So I if I'd have been playing this one a while ago, I might have had something along these lines helping me kind of keep track of what's going on with that trend. I'm not going to put that one in here because that is too far in the past to be useful. But that's what I'm looking for, right? I'm looking for reversals and places where the price reacts to something, whether that happens on a slope of some sort, or whether that is something horizontal, right? You can look in here, and that's what this box is, right? This box is kind of showing that we're in a kind of a tight range here, right? There's consolidation going on inside of this entire box, right? And that's been pretty consistent all the way back to like September. So what are we expecting? Well, we're in a range at the moment, right? A fairly wide range, but a range nonetheless. So how am I using that, right? I've charted out my levels. I've charted out the trends that I see, right? I've got my rectangular consolidation here. I've got this kind of descending line here. I've got this ascending line there, and we can see that we're starting to pull into a couple of those structures, right? So we've got another inside bar that is being rejected by this trend line. So I might be expecting either a push back up and to get back into this wedge for further consolidation, or a rejection here is kind of what it looks like it's telegraphing here, a rejection down, and potentially coming back down to test some of these lows here around 28. So that's what I'm looking at when I'm doing the charting, right? I'm looking for those rejection points, and I'm looking for any significant levels in here that might tell me a story about where price might stop and turn around, because I don't want to play there, right? I want to use those as a launching point to go short or go long or to take profits. It's not a great spot to to get in and expect it to go through, right? It's going to chop around a bunch, right? Those high volume turnaround locations can be chop zones. So what we really want is the chutes and ladders, right? We want the quick moves, right? We want the big candles that move quickly. We don't want these little choppy candles. Those are very difficult to trade and very stress inducing, at least for me. All right, Kroger, same thing, right? And this is, you're noticing that a lot of these tickers have a similar sort of pattern, right? We've got a descending pattern and then an ascending pattern, right? So we're coming together, and ideally, right? And it's more obvious on, so like if you go look at like shop. or not Shopify, maybe it was Cost. Right, Cost has this massive consolidation, right? Like that is a beautiful thing, and at some point this is going to pop and do something really interesting. But I mean, it's like somebody drew a fake chart, right? This thing is so perfectly consolidated in this pattern, right? But but we're looking for those meaningful things, and really what we're looking for is tighter and tighter consolidation. Somewhere in here, this price is going to break out. I don't know if it's going to be up or down, but these are all sellers getting closer and closer to agreement before we can pop out in one direction or another. And we're looking for those same things in these other tickers. And it doesn't have to be a tight triangle consolidation like that, right? We can play any of those other technical patterns, right? If I see, I'm just looking to see if I see like there's not really any head and shoulders in here, or cup and handles, but I mean, here's a little bit of a head and shoulders pattern right here. Shoulder, head, shoulder. Now that got rejected, right? So as soon as we closed, we went up a little bit and rejected. So I mean, it technically completed, but it didn't like continue. But in this case, we got a 1, 2, 3, 4 rejection line, right? And there's kind of more in there, so you could call it more, but 4 major rejections off of this upper trend line, which we have recently breached, right? So you can see here that we recently got over the top of this, and I'm expecting we get up here, we got a little bit of a tweezer top here. We might come back down, retest this trend line, and if this holds, then I'd be looking for a move up, right? If we come back down through that trend line, then we may come back down here and consolidate a little bit further inside of this this consolidation zone. But that would be what I'd be looking for here. I'm not marking this one off for a play, but I may come back and kind of check on it, because if we do hold on this, there's a chance that we can move up. And as we look for horizontal levels that matter in here, right, we're right near one. There's a level here. You can see that there's a rejection there, and a rejection there, all roughly align with this about $50 price. So if we get back up to that $50 line, I might be expecting another rejection, or at least some hesitation in order to see if we get past it. Otherwise, right, if we come back down through this, I might be looking to see, right, the next kind of level of support here was right around $46. So if we drop here, I might expect it to come back down here and retest this 46 zone here. And you can see that level 2 has 1, 2, 3, 4, 5, 6, a bunch of touches in here, 7, 8, 9, right? There's a lot of touches at this level. So this is, I think I'm actually going to mark this level because it really does have a lot of significance. So I'm going to say that one starts right about there. Right, but you can see that horizontal line, the price reacts pretty regularly there. So that's what we're looking for. When we do charting, we're looking for places where the price does something, because the expectation is the more times that a price does something off of a line or a level, that there is a likelihood that it could do that again. And the way that I use that is I'm looking at those as entry points or exit points and not transit points, right? I'm looking for those to go up or to go down off of, because that's where the consolidation and the debate between buyers and sellers is occurring. Let's look at a couple other charts and wrap it up, guys. AMAT is another one. If I'm looking at this one, the pattern that pops out at me here, it looks something. It doesn't actually come out all that clean. That's not a great one. I don't know that I like that one. What about from over here? That's a little cleaner. So we got kind of a couple there with a little bit of a break over, and then there's looks like maybe another one here. So yeah, and this looks a lot like an ascending wedge. So we've come in, we've bounced off come off the top, retested the top, bounced to the bottom, retested the top, bounced to the bottom. So you can see that we're getting tighter and tighter and tighter consolidation here. And you can see that I do have this one marked for a break below 118, which is based on this inside candle here. I'm looking for a break of the parent. You can see that clears a bunch of these levels here, and then I've got some buyers in the wicks over here. But if we do break out of this this ascending wedge, right, we could see a nice move down, and that I might expect a move towards like 112, 110, and if we break through that, we got a little bit of help down here in like the 105 range. But other than that, the next major pivot point or support level is right down here around 95. So if we do break down here, now we could also just bounce off this level and consolidate a little bit further, right? But if we see the breakdown, if this is where it happens, I'm willing to take a look at that one. So, but you guys see what I did there, right? Like I'm just kind of looking at it, and I didn't even get it right the first time. I'm not even saying that this is right, but this is the pattern that looks cleanest to me out of this entire, right, the last couple of months, right? There may be some other things here. If we look at like a higher time frame, you know, there's a clear pattern down here. We're done playing it. There's no point in me marking that off right now because we're out of the structure. So, you know, I think even on the weekly, that ascending wedge really holds its shape pretty well. So let's look at maybe a couple more. All right, let's do NVIDIA and then we'll call it a wrap here. So NVIDIA, you can see that I've got a lot of horizontal levels marked off, right? And I've already explained why I'm marking these off, right? But what I would encourage you to do is count them up, count up the number of touches, because high touches, the more touches you get, the more valuable the line, right? So, you know, in this case, each one of these things I think is marked off from a major pivot point. So 1, 2, 3, 4, 5, 6, 7, 8, 9, right? 9 touch line here. 1, 2, 3. That one kind of missed, so we won't call it and count that, but 4, 5, and then 6 from the top and bottom here. This one starts further over, but you know, 1, 2, 3, 4, 5. So I'm looking for these high touch lines, right? And the expectation that the price will do things, right? We can see that it does stuff at those lines, right? It finds them as support or resistance. And that's what we want to think of, right? We don't want to miscalculate what to do with an area of support or resistance. That should be either where we're taking entry or profits. So kind of continuing on with this one, right? You can see that I marked off a channel here. There was an ascending channel here where we were very consistently bouncing off of the top and bottom. Then we eventually broke out of that. We came up. There was a trend up here. You can see that I had a trend line for this sharp rise up in the tech rally, right? We fell off a little bit. We gapped up, kept our move, right? And this thing's just been bussing. And you can see at the top here, there is a little bull flag forming up here in our candles. And so I am looking for a play down, and I'll explain kind of why that's why I'm charting it this way, or how I'm seeing it. So even though this is a bull flag, right? The expectation for a bull flag is that we'd come down inside of this channel and then eventually break the upper bound here, and then continue our move up. That is the traditional expectation for a bull channel or for a bull flag. Now, bull flags can absolutely break the other way, right? And that would be a break out of this pattern to the downside. So why am I marked to the downside on this one and not to the upside, even when it's a bull flag? Now, I will be watching to see if this one goes up because, you know, there's more room to go up. But here's the reasons I'm watching for downside. There's been a tremendous amount of movement upwards already. We're at a major level, right? This is one of those high touch zones. Now there's one more above us, and let's go look at the weekly chart again real quick, just for context, right? Here's where those lines came from, right? And you can see that the line that we're at right now has a number of touches even on the weekly. So this is a very valuable line because the weekly is respecting it. You can see that the one above it is basically the highest we've been since, you know, what is that? October of, like 21. So it's been a minute, right? We have not been above this line for a very long time. And even when we were above it, we weren't that much farther above it. So how am I calculating that? I'm not expecting that this is our likely target right now, especially not after all the moves we've had here. And RSI, even though it's a lagging indicator, I still use it as kind of a veto. RSI is hot, even on the weekly. And right, so it's hot on the daily, it's hot on the weekly. So this thing should, in theory, be exhausted at some point. Now, it has continued. I have seen so many people call for puts on this thing, and they've all gotten steamrolled. So I am not calling for puts on this thing, but as I'm calculating out my risk to reward here, I see less risk to the downside than I do to the upside, right? I see plays to the upside. There's absolutely money to be made up here if we break out of this bull flag and continue up. But I see less risk to the downside. That's why I'm only marking to the downside right now. Because if we break out of this bull flag and we break down a bit here, we've got room to tumble, right? There's a little bit of space here, but our next major level of support is all the way kind of down here, right? So 233, 223, right? That's where the buyers stepped in. Otherwise, there's really been no support, right? The sellers didn't even have a chance in here. This thing just rocketed up. So there's no wicks covering this space right here. Needs to be filled in. So I'm expecting a play down. If it's not here, if it's not out of this flag, it's going to be out of here somewhere. At some point, we got to come down and fill all this in. Nothing goes straight up forever. So, that's kind of what I'm looking at here, guys, is I got my horizontal levels. I got the shapes that that I'm interested in. I've got the candles that I'm interested in. I have the expected behavior, where I would take entry, where I would take exit, whether I, like in this case, I know that I'm going to take, if I break this level with any strength or conviction, I'm going to take, I'm taking puts, right? I'm going short on this ticker. And I will cut those if we go down and then come back up, right? If we get above this inside candle, if we break the high of this inside candle, I will stop out. That was a bad, my thesis didn't work out. It's okay. It doesn't make me a bad person. It just means that the play didn't go my way, and I will cut my losses and I will walk away and I'll find another play. No big deal. If it goes in and the play goes my way, right? I'm going to be looking to take profits in these wicks, right? So my first profit target might be 555, and then I might be looking to get all the way down to 240, right, because of this big gap here. So right, so I'll take some off here as we make our way down. So I'll take some off right here, I'll take some off right here, and then I will let some run for the long haul, right? And I'd probably do a swing on this one, maybe a couple weeks out, looking for that play to fill in if we do get the breakdown. But that is the way that I'm charting it out. That's how I'm thinking about the process. So I hope that's helpful, guys. If you have questions about anything I've done here today, if there's, if you want me to talk a little bit more about something in specific that we went over here today, just drop a note in the comments. I will try to respond. And it's always helpful to know what other content is useful for you guys. So I hope this helped a little bit. Again, if it did, please drop a like, subscribe to the channel, and check out maybe some of the other videos. I got a bunch of other stuff on screeners, scanners, patterns, other things that might be useful for you. If this video is good, there's more. All right, gang, it is late here. I'm going to have a sip of IPA, and then I'm going to call it a night. So thanks for joining. I will see you guys on the next one. Cheers.